You are listening to chartingwealth.com for Friday the 14th of September 2018. We see stocks up for the day, bonds up, gold down. Our book is available in its fifth printing. Sorry, we've sold the fifth printing out. Sixth printing. And we are happy to send you your copy today. You want to support the channel and the work that we do here at chartingwealth.com, bringing you the daily market reviews every day, the weekly market review, comprehensive review and forecast every week, plus the free trade worksheets, daily market, weekly market worksheets, all the training, everything we do here. Support us by buying our book, Charting Your Way to Wealth. It'll explain to you everything we do in detail. We've got a copy, autographed copy to send out to you. Just follow the links in the show notes. Let's jump into these markets. How do we always start? We start on the weekly chart with the S&P 500. What do we see so far on this latest weekly candle? It is a green up candle so far. We see a little bit of a wick on the bottom, so it's not a super strong candle like it was ending the week of the 31st of August, but it is a decent up candle, particularly looking at the prior week was a red open box candle. We see, however, the derivative oscillator is losing energy, but the price percent oscillator is heading up quite nicely. Let's move from the weekly to the 2-day. What do we see there? Well, it crossed over going down back on the 7th. And the latest 2-day candle is a green open box candle after we had a bit of a green spinning top before. Derivative oscillators continuing to lose momentum. Price percent oscillators heading up a little bit, but still in the negative. Is it going to cross back over and give us a trading position? But maybe on Friday, more likely sometime next week. We go from the 2-day to the 4-hour. It crossed over in the morning on Thursday and headed up even more in the afternoon, so we see that happening. Do we have a trade on the S&P right now? Well, those of you who follow us all the time, you know that in fact we don't have a trade. Why? Because the weekly's going one way and the 2-day the opposite. So we got to wait till both of those move in the same direction. Then that will give us an opportunity to actually jump in. That's what we are looking for. So let's keep moving through these charts. I do want to encourage you, if you're just starting out, please make sure to go to our website. And in fact, you'll see introductions to the YouTube channel and at the website what we do, the introduction to charting. We have 2 good videos that explain our methods, and I would encourage you to listen to those first. What we do is very simple, but it's very effective, and we want you to follow us, train, practice, and you'll find yourself getting better day after day. The more you pay attention to the market, I recommend you follow it on a daily basis, the more quickly you'll gain the skills necessary to be able to tell which way things are going. Is it easy? No. If it was easy, everybody would do it. Is it possible for you to learn? Yes, it is, very much so. Let's go next to the Qs. They were up the most for the day. The NASDAQ 100 tech stocks up 1.01%, but that doesn't mean it's an up week. In fact, what we have right now is pretty much a doji, which means indecision, lots of indecision, tending down. It's a red doji right now. We can see that we thought we were going to see the week end with a crossover going down on the Qs, but it is not happening right now. Derivative oscillators losing energy, but because of the up day, it pulled the blue PPO, price percent oscillator, very similar to the MACD if you're familiar with that. It pulled it back through the red signal line, so price movement still above the weekly. Will we have a crossover? Depends on how Friday wraps up. We go from the weekly to the 2-day, and what we see on the 2-day chart is it is still negative, and we see an acceleration down on the derivative oscillator. Price percent oscillator is still negative. We see that we had a prior green up candle, and the latest candle that's just drawn is a green spinning top, means indecision tending up. But again, price movement's above the weekly, but we still have a negative on the 2-day, so we don't have a trade at this time. Same thing we have happening on the S&P. Remember, we have to have both the weekly and the 2-day. That's the medium and the long chart moving in the same direction. That's not happening. 4-hour chart, we see a crossover going up. There was strong movement in the morning, followed by movement in the afternoon. Derivative oscillator heading up also. So again, we'll continue to watch and see. That 2-day rotates over going up, might put us into a position of jumping into a trade sometime next week. Don't have one right now on the S&P or the Qs. Let's move from the stocks, and we're going to go to 20-year bonds on the weekly chart. We see again a strong red down candle, even though it was up a little bit for the day, 0.13%. Looks like we will have a weekly vertical crossover pretty much for sure at the end of the day on Friday. Remember, you don't call a candle until it's drawn, and a weekly chart doesn't finish drawing until the end of the day on Friday. So we have a crossover going down, derivative oscillator gaining momentum, price percent oscillator heading down. Now again, the weekly still in a confirmed up move. If it crosses over going down, it'll be going in the same direction as the 2-day, and that will give us the ability to jump into the second kind of trade we have on Monday at 10:30 a.m. If indeed this crossover occurs, we'll be able to jump into a down trade that is shorting 20-year bonds if the market looks okay at 10:30 or at noon. You want to know more about that specifically, I encourage you to buy the book where we really explain our two trading methods to you. We look at the 2-day charts and we have a green spinning top. Well, no, that's a green candle pushing up through the 2-day trend line. And again, hasn't crossed over yet, still heading down pretty precipitously. Again, what we want to see happen, of course, to have a potential trade is for that movement to continue, for the weekly to cross over, and for us to have an opening sometime this next week, possibly Monday at 10:30, to jump in after that weekly vertical crossover going down. Derivative oscillator gaining downward momentum, price percent oscillator heading down. And on that 4-hour chart, we can see where we had the up movement for the day, mostly in the morning, paired off a little in the afternoon. Price movement still below that 2-day trend line, trying to cross over going up on the 4-hour chart. So we'll watch and see what we see, which actually would be nice. We'd like the 4-hour chart going in the opposite direction so that then things might change Monday and we could get in on both of our trading methods, both with the 4-hour crossing back over going down and jumping in on that weekly vertical crossover. That would really give us some confirmation. Okay, we're going from TLT to our last chart for the day. That is, of course, gold. Gold was the only thing we had down for the day, 0.35%. Gold's been sliding sideways quite a while. It looks like we may finish the week up with a doji, a green doji, which means lots of indecision tending up. Gold is continuing to lose momentum on that derivative oscillator. Price percent oscillator is heading up a little, but still confirmed down on that weekly chart. We go from the weekly to the 2-day. What do we see? 2 days still heading up quite a bit. We ended the latest 2-day candle with a long wick on a stubby green candle. Price movements above that 2-day. And again, 2 days in a confirmed up move. So we'll continue to watch and see what we see on gold. We look at that derivative oscillators losing momentum, but price percent oscillators heading up. And lastly, we look at the 4-hour chart. We saw lots of movement up in the morning and then pairing off in the afternoon. Remember, these are Heiken Ashi candlesticks, where about 95,000 people have listened to our training on Heiken Ashi candlesticks. Encourage you to take it. It's available at both the website chartingwealth.com and at the YouTube channel. And please take that. You can listen to it for free and you'll get a great deal out of it. It's measured differently than your typical candlesticks, open, high, low, close. What do we see? Derivative oscillator still heading up. Price percent oscillator heading up also, but not all that strong. We ended the day, of course, with a red down candle. So again, we'll wait and see how things might shape up in gold. What are the two charts that we'll be watching closely as the week ends? Of course, the TLT 20-year bonds to see if we have confirmation on a crossover going down. And we're going to see how QQQ wraps the week up. Will there be enough of a down move on Friday to pull the Qs over to confirm a weekly vertical crossover going down? Both of these things happening, both the Qs crossing over and TLT 20-year bonds, will give us the opportunity to hop in the market Monday morning around 10:30 or noon, depending on if you want to use the 30-minute chart in the morning or the 4-hour chart for a noon afternoon entry. We'll continue to watch the comprehensive review and forecast. We'll give you the total skinny on all of it. Again, please subscribe to our daily market review, which includes a weekly market review once a week. We give you all sorts of special training and you get discounts there. If you want to purchase the type of software that we use, a charting software we use is freestockcharts.com with our paid service TC2000, and you get $25 off. Of course, I've used it for years. I know actually the creator, Chris Warden, and the Warden brothers, they're actually based out of the town I live in. Incredible, incredible technology. God bless my friends. All the best from the whole team here at Charting Wealth World Headquarters.